All right, come on in, have a seat. We're going to start here for our More Grace Town Hall. Matt Stribling, would you close the side door there for me? Thank you, sir. Thank you. All right, I'm strangely talking to you from back here because I got to push a button. Welcome. We're going to start with a video that's going to set up our topic, and then we will have our panel come up to interact with you and answer some questions.
Hi, I'm Alan Buttery with the building team.
And I'm Jason Flug with the ops team. And we want to give you a deep dive into the financial details around More Grace.
Estimating the cost for a church building is tricky because it costs a lot of money to figure out how much it will actually cost. So at this phase, architects estimate the total cost by counting up the square feet of the project and then multiplying by the current cost per square foot of construction in the area. So after we got all the needs from our ministry leaders, our architect designed a building of 16,000 square feet. Construction is about $250 per square foot, so that first building would have cost around $4 million to build. Our sense was that this was too expensive for our church to safely pursue. So we sent the architect back to try again, and he got us down to 12,065 square feet, which cost just over $3 million to build. Now that's just construction. We also need to add money on for technology and furnishings. That brings our estimated cost up to $3.5 million. That's still a lot of money, and it's still just a guess, but it's a good guess, and we feel it's in range for our church to accomplish. Here's how we do that.
First, we want you to consider the financial health of the church. 5 years ago, our annual budget was $356,000, and our attendance was around 170 on Sundays. Since then, we've seen healthy growth in giving and in people. We have posted several significant surpluses where giving exceeded our spending, and we have put the majority of that into the building fund. The fund is currently around $400,000 and will likely grow to $500,000 by the time we build. So we're off to a great start. If the church continues growing in the way it has, then in 3 years, we can hope to see a budget around $800,000. Given the growth of the area and the excitement of a new building, it's a pretty safe bet. The second financial consideration for a new building is the sacrificial giving of our members. As part of More Grace, we're asking our people to make a 3-year financial commitment above their regular giving. Compared to other churches doing similar projects, we would hope to see between $1 million and $1.5 million given over the 3 years. And that leaves the third part of funding, which would be securing a responsible mortgage. With $500,000 in the bank and say $1.2 million committed, that would require a mortgage of $1.8 million with an annual payment of $190,000. Matt will talk about the pros and cons of a church getting a mortgage in a separate video. But as you can see, given our projection of growth, by the time the full mortgage payment hits us, our budget should be in the right place to handle it. We've already set aside $50,000 this year, which we are going to more than hit. Then $70,000 over the next 2 years gets us to our targeted mortgage payment of $190,000. The next question has to do with timing. The cheapest way to do this is to wait the full 3 years for all the commitments to come in. Then we secure a mortgage and start construction and move forward. The problem with this scenario is that it puts us in a new building about 4 years away. 3 years plus 1 year to build it. And we are growing fast enough to need the building sooner. So another path looks like this. We figure out the amount committed, we get a construction loan and begin building as soon as possible while the commitments are slowly coming in. That construction loan peaks at around $2.6 million, and we only pay interest on that loan during the 3-year commitment period. But as the commitments come in, they pay down the temporary loan, leading to a final amount that becomes our mortgage. This is more expensive, but it meets our needs faster likely grows the church quicker, which grows our budget quicker, which puts us in a better position to pay the mortgage. Our leaders haven't decided which of these two paths to take yet. Much of that depends on the amount of the commitments.
This leads to the big question. What if the amount of money committed is too small? One option is to shrink the building again to get it into budget. We don't want to do that because we think this design meets our needs quite well, but that is an option. Another option is to collect the commitments over 3 years, allow the church to get bigger, likely go to 3 services on Sundays to handle the growth, and then invite the new members that join us during those years to make their own commitments to more grace. That could push us over the line and allow us to start building. Either way, we have to do something. We know it's an expensive time to build. We're watching interest rates carefully and hoping the environment gets better for construction. But we also know that, just as any business that hopes to grow takes on a certain measure of risk, a growing church usually has to take on some financial risk in order to build the space it needs to grow. We know this project will take sacrifice. Building a church is never easy. But we believe the risk is acceptable and financially affordable and worth it to make more space for more grace for more people to give more glory to God.
All right. So if I can ask our panel to come on up. Let's see. And there's a microphone that may have run off. Was right there. Let's hang on a second. While we fix this, if you would introduce yourselves, and I don't always do this, but I think it's especially helpful here. Give us, like, what do you do for a living? Like, what's your day job like? Matt, why don't you start?
Right. So my name is Matt Sterling, and my day job is I work for a small Korean startup called Samsung. And I do outside sales for them, so I worked for them for about 4 years. Prior to that, I ran the business at a company in town, an IT company called Cinex. Prior to that, I worked about 5 years in banking as an assistant branch manager at a bank. I've also run small businesses, and I've been the church secretary at Grace Bible Church for 1 year.
Well said.
I'm Anna Fuller, and I'm the director.
Sorry.
I'm the director of operations at Greenville Classical Academy, a private Christian school, and I'm also the assistant to the head of school, so I kind of handle the school calendar, his calendar, HR, finances, all that fun stuff.
Jason Flug. I take the traditional CPA path. I worked for a audit firm for 5 years in Atlanta, then came back to Greenville, and I worked for a finance company located in Greer. I'm the controller of the accounting department, so a lot of accounting experience.
And of course, I'm Alan Buttery. I work for TD Cinex Corporation, the successor of Cinex that Matt used to work for. We merged a couple years ago. I'm a senior vice president of financial operations, so have my hands very steeped in corporate finance world. I've been there for 27 years, and prior to that, I was in banking.
These guys handle way more zeros than I will ever see in my life. So I just want to say that because this gives me like some courage as we go down this road to know that we've got some brains on this that are this is their world. This is what they do. Matt's on the ops team. The other 3, or you're on the ops team. The other 2 are on the building team. And so we're here to take whatever questions that you might have about the financial side, except for debt, because we're going to show you a second video specifically about the biblical nature of borrowing money. And then we'll do that as our second question. Yes, sir.
Yeah, so if I understand the way the vote's going to work coming up from the presentation is that you've got at least 2 or 3 different scenarios of how this work can be done. And then the vote's going to be to go ahead, depending in however the funding comes in or the commitments, you've got a way to go. So we're voting later this month that we're going to approve the building. And will there be another vote depending on what kind of commitments you get in? You know, because that's kind of what I thought the way it would work is that once you get the commitment, okay, this is what we got. Now we know what kind of mortgage we need, and we're approving this whole thing based on, you know, the commitment. So is there going to be another vote, or is this it?
You're thinking exactly right. So our Constitution requires us to vote to make a decision like this, to build a building, and also specifically requires us to vote to borrow money. And the reality is, as Alan was saying, we maybe you can say more, we don't actually know how much it will truly cost,
Right.
right?
Correct. We don't really have a handle yet on how much we might need to borrow. We don't know what the current rate environment's going to be at the time we do borrow. We have an idea and a range of payments that we've looked at, but we don't know what that number is. A lot of it's going to depend upon, it's going to depend on all those variables I just mentioned, but it's also going to depend upon what the church does from a giving perspective, right? And we won't know that answer, at least in terms of the commitments, for several weeks yet.
2 votes, is that correct?
Yeah.
There's also the aspect of so the next step, really, this next approval is to approve us to get technical drawings. So we have plans.
Put it up a little higher.
Okay.
There you go.
We have plans, but to get the technical drawings, we have to have that before we can go to bid to get an actual price. So like Alan went over, what we're working with now is a cost per square foot estimate based on the architect, rough numbers. So the next step is to approve the plans that we have to get technical drawings so we can get the actual price. And then after that, we have the commitments to find out what financing path we go through.
Mhm.
Yes.
Good question. Yes, sir.
So with regard to all the in the budget for this year, we started kind of preparing ourselves for payments to try to put aside some. What was that about? What was
You recall correctly, my friend. So we didn't want to go from one budget year of 0 mortgage payment to the next budget year of however much, like thousands, tens of thousands of dollars monthly mortgage payment, right? So what we did this year was we started making a little step, and then next year will be a little bit bigger. So this year was $50,000. We called it a preliminary mortgage payment. That money just went into the building, goes into the building fund, so we're using it to set aside. So I think on the video you saw that 400,000 number, and we're hoping to be at 500,000 number. Part of that difference is the extra that we have left over in the budget. The last few years we're putting in the building fund. That 50,000, the plan is to put it in the building fund. We'll see for next year. My hope, my goal is to get that doubled to 100,000 for this next year. We'll see. We're in the middle of early stages of getting all the budgets together right now. So yes, we're planning for that. We're starting that ramp up on the mortgage payment. We've built into the budget this year. We're planning on increasing it for next year. There's no real risk for that, because if we came below budget this year, if giving was below budget, then we would just, it's not an obligation we have, right? We just lower that amount. But praise the Lord, we're above, giving is above budget this year, so we don't have to worry about that, so.
even with the 50K?
Yeah,
right. Praise the Lord.
And giving is above budget and spending is below budget.
Jason, tell us, how are we doing?
So as of this week, we have a $80,000 surplus for this year. So our current budget was $650,000. 50,000 of that was for the building, and we're 80,000 over budget. So and that surplus we're counting as to the building. We'll put that to the building fund. So we're definitely heading the right direction. And even the $650,000 budget that we set, we thought we were stretching the budget. But yeah, we still end up in a surplus position, which is great. It's a blessing that we keep surprising us.
Yeah, the Lyles moved back and started giving, and it just, it just took off. It's unbelievable.
80,000, how much of that is cost savings that you were able to come in under versus how much of it is mostly giving?
The 8,000 is just surplus and giving, not, and we are also under our cost budget currently, so that's in addition.
Are there any questions? Others? Yes?
No, is it just very strictly off of giving? I mean, is there other like community events, or say fundraisers, or anything else that can help out the budget as well? Or just like, is it just specifically off of mortgage giving?
You got something?
So, no, that's a great question. So our budget, our income for our organization is just giving from the members, no outside organizations and no outside events. This is God's people, this is His church, and He provides for us, and then we are good stewards, and we give that back to Him. And so one of the things I appreciate most about Grace is that there's not we want to follow the Bible. We're not looking at gimmicks and all these extra things. We're not doing bake sales and car washes. Like, God gives, His people are generous. They know they're stewards. They give to the Lord through this church. We're very transparent. We want to be very responsible with the finances, and then use it wisely to build His kingdom. We look at it right now. I said we're in the budgeting process. My ask to each of the ministry leaders was to just look at this as an investment in the kingdom. How much budget do you need to grow your area of ministry so that we can do more kingdom work? And I think that over the history of our church, the Lord is just really blessed by us taking that approach.
I mean, Anna really wanted to do bingo, but we had to say no to that one. But he's right. The biblical picture is the giving of the people. That's how we. So you notice we don't do a ton of fundraising. We just ask people to give. Yep, well said.
Yes, sir.
So if we are underestimating and the Lord provides and we end up with a $4 million More Grace contribution from the church, do we go back in to redesign it and build a bigger church?
We'll probably just build a pool with the extra money.
Land over here.
Anybody have? I mean, I would bet. It's hard to say. You know, that we shrank the building, the first one, down to where it is. Actually, I think we improved some things when we shrank it. That we learned some things through the process. So I don't think we would just go right back to that original one. But if we had a whole lot, I bet you the building team would see, how could we be even better set, for the future. And hopefully we want as little debt as possible. The debt is just a tool to get there.
Yeah, what I would add to that is when you go back to the original design, of course, we've been through this process several times now, going to all the ministry leaders, what do you need, and those kinds of things. And so that first design had most of everybody's wish list in it, right? And all those extra wishes were about 4,000 square feet more, right? So, there's a balance between what do we need versus what do we want versus what is best case versus what is good stewardship. And so I think it would be very thoughtful and prayerful before we made any changes, because the force to get in downsizing the building forced us to be more efficient and to look at what were really the needs versus the wants. And so I think that was good stewardship.
What, again, with the design you've got now, are you looking at for capacity in the sanctuary? And I think you're still looking at 2 services. So for each service, and I know you've got 100%, and then you look at 90%. What are those numbers?
How many seats in the new auditorium?
I think it is, so this room is about 160-ish, to give you a comparison. I think the new one is 290, so it's not quite double. And
100%, or is that?
That's just number of seats.
that's just number of seats. And then, we usually it's 80 to 90% is full, to a room. Now, it's a similar flat floor with seats like this, so you're able to, when things get really crowded, we can shrink these rows and fit extra seats in here if we have to. So that same thing happens. We could, that 290 number is sort of the target. We could probably squeeze more in on like an Easter or something like that. But we also intentionally want to remain in 2 services because of the benefits we get for children's ministry where people can serve one and attend one. And so even though, we talked a little bit about, what it looked like. We could go to one service, for a time in there, but we would need to, long term, if that was the plan, everything would have to be a lot bigger. If you're in one service, you need more parking, more seating, everything's got to be bigger. So 2 service has some efficiencies to it.
What was the biggest shrink as far as square footage between the first plan and the second plan? Where did we take the most shrunk?
The question is, what did we shrink the most from Plan 1 to Plan 2? Memories? It was so long ago.
Yeah, I can speak to some of it. It was a while ago, but we eliminated a lot of office spaces, right? So that was one thing. We reconfigured a lot of the children's space. You've heard in some of the feedback there was a desire that this building would be exclusively children, right? And so that was more of that was in the first plan. I don't remember if it was 100% or not, but it was close. We can't do that in the smaller building, right? So we took out offices, we moved things around. Some of the kids had to be split between this building and the new facility as well. So that was a big part about how it changed. But if from a square footage standpoint, if you put all the kids in this building, then you've got other activities you got to plan for, and that made the new building a lot larger.
That original building also had a different strategy because if this phase that we're going to build now, if we were to grow past that, we got to say, what do we do next? So this thing is built for if we ever needed it, another building could be built next to it. The original building, auditorium, was made so that walls could blow out and it could get bigger in that space. You know what I'm saying? So build it this big and then it goes like that. That requires a larger building to hold that too. So part of the philosophical change is we said, let's build it with an auditorium here, and if we ever grow past that, we'll build the bigger auditorium in the next building. See what I'm saying? So instead of this thing that can get bigger, so that changed a lot of things, as far as how that would work. So lobby's a little smaller, I think. So we took it from a few different places. Good question. All right. I think we have one more video. Just want to compliment Jason. You seem amazingly excited about the building program in that video. I wanted to really give you a thumbs up on that. You did awesome. All right, you guys can have a seat. We're going to play one more. And we're going to talk about, is it okay for a church to borrow money? That's our next one.
You're going to need this.
Hi, I'm Matt Stribling from the Ops team, and I want to talk to you about the role of debt in a growing church. Like most of you, I remember signing the paperwork for my first home. Especially when you're just starting out in life, home ownership can seem overwhelming. However, for us, it was really clear that buying a home for our growing family was virtually impossible without some sort of mortgage. And now, decades later, it's been one of the best financial decisions we've made. When making these big decisions, it's imperative that we carefully consider what the Bible says about a topic. And on the topic of debt, the Bible says quite a bit. First, the warnings. Proverbs 22:7 says, "The rich rules over the poor, and the borrower is the slave of the lender." It is true that there is risk in borrowing money. You enter into an obligation with the lender, and if that obligation is unwisely made, it can make you feel like slavery. That's just the reality of the situation. All of us, business owners, homeowners, and our church, We all want to be debt-free. It is a worthy goal to strive for. Later, in the same chapter of Proverbs, it says, "Be not one of those who give pledges, who put up security for debts. If you have nothing with which to pay, why should your bed be taken from under you?" Here, a pledge is like collateral for a loan. And this guy has gone so far into debt that he's pledged his own bed as that collateral. That's way more than he should. So we do need to be cautious about taking on too much debt. However, the Bible does not prohibit debt. Psalm 112:5 says, "It is well with the man who deals generously and lends, who conducts his affairs with justice." Here we see a righteous man who is a good businessman. Part of that good and just business is lending money to others. Obviously, if debt was a sin, then helping someone go into debt would also be a sin. That's not what we see here or elsewhere in Scripture. Psalm 37:21 says, "The wicked borrows but does not pay back, but the righteous is generous and gives." The sin here seems not to be the borrowing, but failing to pay back the debt. Not keeping your word is a serious offense in the Bible. So, as one author put it, debt is not a sin, but it is a burden. In Matthew 25, Jesus told the parable of the talents. A man gives money to 3 servants. In reality, we would say he lends it to them. The first got 5 talents, worked his business, and made 5 more. The second got 2 talents, worked hard, and made 2 more. The third got 1 talent and was afraid of risk, so he buried that talent in the ground. When the master returned, he was not happy with his third servant. His master answered him, "You wicked and slothful servant, you ought to have invested my money with the bankers, and at my coming, I should have received what was my own with interest." So Jesus commends a man loaning money to these individuals as an investment. And he calls wicked the servant who didn't invest that money in a bank, which of course would have loaned it out, because that's where the interest comes from. We see Jesus himself approving of careful and wise lending, borrowing and repaying for the purpose of investments. Almost any business starts with a loan. Almost any farmer starts with borrowed seed. And almost any church that tries to build a facility starts with some kind of borrowed funds. I think of my own mortgage. We have one income. My wife stays at home and homeschools our children. If I lose my job, that mortgage becomes a significant risk or burden. But if a church has a mortgage and I lose my job, I am only one giver in a congregation of hundreds. It's far more likely for a family to default on a mortgage than for a church to default, because a church mortgage is spread across far more people. So we see this as much less risky than a personal mortgage. Now, there certainly are families and churches that have a policy of no debt, and that can be a good thing for sure. And if our church was in a part of the country that was not growing, that was economically depressed, and we just wanted a fancy new space, that would not be a wise investment. If we wanted to go huge and build a massive complex with all the bells and whistles for every ministry we could think of, that would also not be a wise investment. But when the church is in one of the fastest growing parts of the state and is consistently showing a strong track record of financial health and numerical growth, and has a history of borrowing, like we did to build this building, and then faithfully paying off that debt as soon as possible, like we did, then it seems that borrowing money would be a wise investment, just as the man gave money to his servants to be invested for his purposes. That's why our elders, our ops team, and our building team all think borrowing to wisely invest in kingdom purposes is a good next step.
All right, panel. So the question, should a church borrow money? Should a church go into debt? As you saw, we'll have a second vote at some point to authorize the church to do just that. Questions?
Yes.
So just real quick on the mortgage, even though it may pass in our church, to get a mortgage, you have to have 92% of the church members to vote yes. Is that correct?
So that was a desired target, and I did say that in the Grace Life meeting when we met that night. And that was a number I got from the key lender at Seed Financial that we were talking to. Now, in talking with him further, 92% is a target, but it's not a requirement. So I don't have a firm number, but I would venture to guess that if we're above 85% or so, that we shouldn't have any problems.
Good question. Others?
So I know we're just at the stage we're not sure exactly what the mortgage is going to be, but what's, for our estimating purposes, what's the term that we're using?
The question is, what are the terms of a potential loan we might get?
I actually thought we were going to get more budget conversations, so I gave Matt the mic. So regarding the mortgage, what we're looking at is up to a 20-year term. And so the amortization or the payments would be based upon 20 years. We would, however, after 5 years, have a rate adjustment period for whatever the current market conditions were. So that rate could go up or go down at that point. We'd be fixed for the first 5 years. But the way to think about it is a 20-year mortgage.
And for the numbers, for the numbers that you're running right now, what rate are you using to estimate it's going to be?
In terms of what we're using, are you asking about what the rate assumption is, what the payment assumption? Rate assumption, we've got Jason set up a really great table with sliders where we can move these numbers around. Anywhere from 8 to 10% is the range we're looking at right now. When we had the last Grace Life meeting, current rates were around 8.5. So.
Yeah, 8.5 was what we used in the estimated mortgage payment.
And we're obviously hoping those go down this year. We're expecting them to go down. No one knows, right? But we would hope that those would go down. And so we started this process kind of at the high end. And so hopefully this period will give us some advantage.
Yeah, just as far as the interest rate environment, I work at a finance company, so we watch Fed rates closely. They've reached a peak. The current consensus is that they're not going to go any higher, and they're talking about when will the rates come down. There are projections for decreasing the rates back down, which is good for us. The rates we use in our assumption were really at that peak, so it could only get better is the current thought.
Tanya.
That was actually my question on residential lending. So I wasn't sure what the commercial environment was at this point, but I do know that they are anticipating to go back down. So a couple of years out is actually a really good projection that they will go down.
We, of course, on the corporate finance side, have our own forecasting because we pay billions of dollars in interest. All right, so as we said, a lot of zeros. So we monitor that very, very closely, and we have our own forecasting group, financial planning and analysis, we call it. And that team, internally tends to be very conservative. And because we don't want to miss our budget and our projections, we're a publicly traded company, so we've got to be reasonably accurate on those numbers within a very small margin. And so they do a really good job. And right now the thought is that we're static through the election, and that whatever happens in the election, we're most likely to see rate reductions early next year.
Yes. If we do see rate reductions, is that gonna raise costs of other areas of the projects? I imagine usually as rates go down, everything else kind of goes up. How's that being measured?
I'm not aware that we've taken a measurement on that, but I do get your point that typically what is likely to happen is rate goes down, demand goes up, that reduces supply, and that of course drives prices up. So that's a possibility as well. I'm less concerned about cost of materials than interest rate. The interest rate has a far greater impact on our payments than would increases in materials.
Once, okay, we get the loan, at that point, are we locked in? Or if rates go down even more, can you
We can look at refinancing with another lender. I can tell you Seed Financial that we've been talking to in that 5-year lock-in period on the rate, they would not refinance it in that period. We would pick up a new rate at the conclusion of that 5 years.
So we talk about God's provision, and obviously that's what we're trusting in, but we don't have the money. So where does the line come in? We're not using God's provision here because God hasn't provided us, $3.5 million. So it feels like we're trying to take it into our own hands, and I'm just trying to figure out, like, from y'all's mindset, how do we justify this? There's nowhere in the Bible where it's a positive thing to take on debt. It's only warnings, and if you dig around in the verse, you can kind of see how there's some debt relationship there, but it's never positive. And again, God hasn't given us this money to build something. So why would we look at something we can't afford?
So good question. Is God not providing if we have to take a loan? And there are some churches that do that. They just wait until all the money is there, and then once they have all the cash on hand, they do it. Similar to, there's some families that do that. They just wait until they buy their first house, they save up all the money, and then they do it. And that is by far the minority of families that do that. And I would say for churches it is similar. I would suggest that the Bible has several warnings about debt. You're absolutely right. I might push back a little that it's never positive, in that we just saw some examples of where it is spoken of in positive light or righteous kind of business dealings. And it is not commanded not to do, and God's people would use debt in certain ways. And so the question of provision, like I think of my own family, with all the kids that I have, the fact that our economy allows me to get a mortgage the way that it is, it fits in our budget, it allows me to get a house, in many ways provides for me to do that in a pretty cool way. Like I'm able to get a house that I could never afford when I was just first coming through. So the question of it is how God provides. And again, people might disagree on this. Some people might say that provision is only if God gives that full amount of cash, there. And I would not, I have pastor friends who would think that. And I'm not going to say you're sinful for believing that. I would just want to respectfully disagree given some of the biblical pictures that we see.
But I appreciate
your push on that because you want us to trust God. Like you really want us to depend on God, which we absolutely want to do. Like our hope is that in this whole process, that is a major trusting in the Lord. And if we are not, our prayer is that He will stop us. And perhaps that, like if the second vote is another stop, let's say. Like I think the elders and the teams would look at that really seriously and say, all right, Lord, is this a question of your provision? Do we need to stop?
Good. Other thoughts? Yes.
In the budget, if you do go and end up with a loan and a mortgage and that, how is the budget going out if you don't receive all the funds? The growth doesn't happen and the economy slows down. We've got to make a mortgage payment now that we're held to. We also have salaries that we're held to. Where does this come in? What do we cut out or whatever to make this happen? Because something would have to get checked.
Yeah, well, that's a great question. So, in a worst case scenario, and we don't know the future, right? And so let's say a few years down the road, something happens and we do have, we'll have a few things that we have committed to that we have to continue with. Mortgage is one of those. So we'll just have to look for other ways to cut and trim. We would ask, obviously, that God would provide and that He would make that up somewhere. I think that at any point that we do this, there is going to be some risk, right? There's no way you can eliminate all risk in all business decisions or all financial decisions. And so then it comes down to a matter of you just have to weigh our wisdom, your wisdom, the Holy Spirit's leading, and just come to the best, safest conclusion that we can. And so that's why we think what we're at. we definitely could go bigger, right? We could go even more, but we feel like that's too much. We're at the upper end maybe of what we believe is safe, but we don't want to push it even further because we don't know the future, right? We don't want to be overcommitted in one sense, but barring economic factors widespread, like another COVID, where something happens that we just don't know what's going to happen financially, we do think that building a bigger building, doubling our seating capacity, doubles our attendance, it could double our giving, right? In which case, we would easily be able to afford the monthly payment. What we're doing now is projecting this congregation in this building being able to afford that building, right? And we feel like we can even safely do that here. As we move into a new building, our hope and our prayer is that as we reach more people around in Grace, right, that our giving would even increase beyond that. We don't know what that's going to look like, but that's the most real probability when we look at this, is that our income, our giving, would increase substantially just because we have more givers, more people coming.
I know that some churches have gotten a bad rap for loans and stuff because they default. There's a lot more of a default rate now. So I'm just wondering where we are putting the priority of the mortgage payment in the budget compared to other things.
Yeah. So there's a few things that we wouldn't want to move. Eric's salary, right? We want to keep Eric around, right? Below Eric, everything else is optional, right? No, we would have to have some of those hard conversations prioritized. There's been years in Grace history where our giving has gone down, and we've had to make cuts. We've had to tighten our belts. We've had to, even lay off my wife. So there's been times where things have happened in the history of our church. We've had to make those hard decisions, and one thing that I really appreciate about Grace is, one is that we have a plurality of leaders, right? We have many wise elders looking at this. We have wisdom from these different teams. We also have a congregational model where we have the input from the congregation so that, it's not just one person getting his way at this church, right? We want God to get his way in this church. And so if it comes to hard decisions like that, there's only so much that we can foresee today, but I know from the history of this church that we will look at this and try to make the best decision we can with a difficult hand, because that's what we've done in the past when we've had to shrink the budget.
And I can talk a little bit about default rates on church lending. In my personal investments, one of the things that I invest in is church bonds. And church bonds are basically loans to churches for things like what we're talking about doing. So every time I get an opportunity to invest in a church bond, I get a prospectus that is like this. And one of the things in the prospectus has to do with default rates over time. And it lays all of that out very, very well. The lenders that lend to churches, whether it's a bank, whether it's the Baptist Foundation like we're talking to, are very, very good at assessing risk. And they provide ratios that we need to comply with and be within. They look at what the default rates are. They look at how much of the congregation is invested in the project. That's why the giving percentage is important, because they're looking for default rates that are well less than 1%. And historically, that's what they've done. Now, I can tell you in one of my investments, I had a church got in trouble, and I got a letter from the trust company that manages this and says this church is having some struggles right now. We just wanted to make you aware. And it was about 6 months later, I got another letter that they figured it out. Everything's back. The loan is now back in compliance again. So even churches do get in trouble and have a struggle, but by and large, almost 100% of them figure it out, right? And so the risk is shown, and I've been in these things now for about 15 years, the risk is shown to be exceptionally low. So,
in my career as a pastor in multiple states, all pastor friends, I can't think of one that's ever defaulted. So, and part of that is banks do not like to foreclose on a church. That's really bad optics, you know, to bank comes in and take the church building. So they do everything in their power, and churches do everything in their power to try to make it work.
Yeah. So if they think we're at risk at all, they're not going to lend to us.
Yep. Question, Brock.
Any others? Yeah.
Two quick ones. One, I think I know the answer to. Do we have any debt right now? No.
We are debt-free.
Cool. Okay. Second question. Are we, so 20-year term, ideally, like how fast would we like to pay that off? Are we going to go the full 20 or 7 or what?
A lot of unknowns in that scenario. You know, if we do a 20, we could go the full term. That's if we had no growth and actually, you know, came in with less growth than we anticipated. So I'd say it's unlikely we'd go a full 20 years, and we'd pay it off basically as fast as we could. And then the growth is going to come into that, and plus the campaigns that we have during that time period.
Yeah, the goal would be to get debt-free as soon as possible. Yep.
Or if you gave those right now percentage-wise, I mean, do they have a target for us moving to the bank of, not the commitments, but just like how much giving percentage of the church right now?
Yeah, it's not really quite laid out that way. What they're looking at is dollars per giving unit and some ratios based around that. So the number of giving units relative to the total dollars, because they're making an assessment of, based on history, of what average giving per giving unit might look like in a given church, right? And so you've got a wide range in there, but you know, so they're looking at those types of numbers. The number of giving units is key relative to the budget. That's one. You know, all the standard lending ratios also fall into play, right? So in our case, it would be fund balances, the equivalent of a debt-to-income ratio, and things like that as well. They're going to be, you know, pretty precise on, can the church afford it? And we've got those ratios and, you know, a table of all those, and so we're watching that and making sure we can comply with that.
There's also, in that analysis, they want to make sure, like if the Farnsworth family is paying
like 3/4 of the budget, like this one.
really rich family, well, that's not good.
Yeah.
Because if that one family were to leave, that causes huge, they don't want concentration in a family. They want it spread out across giving units, you know, more, and part of that's part of the analysis.
Right.
The growth we've seen recently of the giving, has that been a higher percentage of people giving, or just the overall group of members is higher, and so therefore the same percentage is given as always, it's just we've got a bigger group of people now?
I'd say it varies, but I'd say generally it's the growth. It's not just one individual who's causing the growth. It's spread over, you know, new members coming on, and then you know, starting to give as they come in and grow the church.
I think we're in the middle of doing some of the analysis now for the budget to figure out the target. But in the past, we can identify single large donations, right? And we don't give those as much weight when we're factoring in the budget, right? Because those are not repeatable. And so we're looking at the members that give weekly or bi-weekly regularly. We actually can track that, and we have a lot of details to figure out who's giving, how many people are giving on a regular basis, and how many people are giving maybe sporadically, and then how many one-time donations. And then we kind of balance all of those factors out when we come up to how much we think we're going to get in this next year or whatever, right? And we monitor all of those trends. And so I think it was 2 years ago, we had one gift that was actually 6 figures. Well, we almost didn't even calculate that in when we projected the next budget, because we know that's not going to be a repeatable event.
Yes.
Do we know health-wise how we compare as far as our giving membership or the body? I'm assuming that churches have like ways to like track how generous the churches or how healthy overall giving as far as.
So we don't look at that, and no one's asking us, and we would be very hesitant to share those types of numbers. So I don't know that, unless you're part of probably a larger denomination that's reporting that kind of stuff, I don't know that we have that or that we could get access to that. It's probably out there somewhere that we could look at, but we're not doing that currently. And part of that is, it doesn't matter what they're doing. It matters what's happening here with us. There's so many other factors. Who knows what they're doing? But I think that Eric had mentioned many times his experience with his pastor friends here locally, especially through COVID, and think how they fared versus us. We think that we have a healthy congregation and giving environment and budget, so it's working for us. If it started there was some anomalies, I think we would be interested in seeing are other churches experiencing this as well or not. But so far, everything's going well, so we haven't looked outside much.
Yeah, like he said, we've never looked at anything specifically. I don't know that we'd have a place to go. I think the most relevant to what you're speaking of would be the lender. They work with churches. They have their own portfolio, and that's where the metrics come in on where, they're looking for a specific range for risk. And I want to say all of the ones that we were looking at, we were in the range that they're looking at for the appropriate level of risk.
And comparing to membership in other churches actually wouldn't be very meaningful because the definitions of membership are very different, right? The bar for membership here at Grace is pretty high.
That's right. Good, Ryan.
But from my understanding as well as my wife and lending as well, is lending not a great form of service anyway, and would we be prideful not to take advantage of that service?
Question is would it be prideful not to borrow? I wouldn't want to go quite that far. It's a reality in our economy. There's risk. You've heard about that. I mean, every business, just about every business starts with some kind of startup lending thing. So without lending, our economy almost wouldn't function, probably. But I have respect for folks, like my brother here. I have respect for folks who want to avoid debt as much as possible. Yeah, and so I would not want to say, if you had credit available to you and you didn't take it, that would be a sin or be bad. But I would also not want to say it would be bad to take it. I think just in our world, there's some advantages, strategic advantages to do so that I think help a business. Church is a business. It's a nonprofit business in some sense, to be able to reach more people. And you just have to decide what's the best stewardship of our situation that we have. All right. Any last questions? All right, we'll hang around. If you have a personal question you'd like to ask, next week it's our last town hall. We're going to talk about how many services and why we think about that. Also, how big should the church ever get? Is there a limit? For a church to be effective in its size? We can talk about, also we'll have some diagrams to look at some of the changes in the plan. So anything you'd like to know, next week, same time, we'll see you here. Thank you, guys.